Welcome back to another episode of the Indy Investor Pod. We are Indy investors talking Indy investing. You got Brian and Randy coming at you today. And today we got a great topic. We're going to talk about the top 5 strategies that we see investors having success with right now here in Indianapolis. Our investors that are buying properties from us, this is what we see them doing. We see them having a lot of success with it. So we thought it was worth having an episode about. And with that, let's get on with the show. All right, and welcome back to another episode of the Indy Investor Pod. Randy, how are you doing today, my man?
I'm doing amazing, Brian. I'm just happy to be here again. Love doing these top 5 lists with you. I just love doing stuff like this and hopping on, chatting real estate.
I'm excited because you came up with this topic and you kind of did the notes for this episode, so I'm excited about that.
Yeah, I tried my best.
So awesome. So this is pretty cool though, because this is episode 50. So we launched this podcast, about 25 weeks ago. We've been putting out 2 episodes a week. We're on episode 50 right now, and also we have some new Indy Investor Pod T-shirts that if you get to join us in the pod, we'll be sending you a T-shirt and things like that. So if you're already on a pod, we are getting it mailed to you here shortly and stuff like that.
And they are comfortable.
They are very comfortable. So I'm glad I spent that extra couple bucks because it's worth it. They're pretty comfy. So awesome stuff. So 50 episodes in. Hopefully you're getting a lot of content, a lot of value off of what we are talking about on the Indy Investor Pod. Let us know if you have any topics of like, man, I wish they'd cover this. I wish they could talk about this. Or I'd love to know this, or I'd love for them to interview this person. Any of that stuff, we would love to hear. Any critiques that you have for us, or just any suggestions would be great. So, but with that, today we decided to talk a little bit about, and actually this was a suggestion from one of the guys that was in town a couple weeks ago. He said, hey man, I really wish, could you guys do an episode on just maybe some strategies that are really working for some of your investors, some of your buyers. We just like, yep, right there. We're like, yep, that's an episode. Let's do it and things. So we just kind of came up with a list of the top 5 investment strategies that we see people that are really working in Indianapolis right now. Some of them that we do ourselves, some of them that our investors are doing as well. So Randy, before we get into this list, do you have any input or anything, any insights before we dive in?
Yeah, like you said, this is just 5 strategies that we've seen in no particular order. There's other strategies out there that people are also doing as well that won't be covered here, but these are just 5 that I handpicked, ran it by you, and it seems to be a good 5 good topics to go over. So
yeah. So like Randy said, these are in no particular order and stuff like that. So let's start off with the first strategy that we know very well. It's what we do each and every day. It's a big part of what our business is based off of, and that's wholetailing. So right now the market is so hot. The properties are selling for things that I didn't think they could sell for. They're selling super fast, super quick, and just for good prices. If you're pricing it right, they're going to sell in a good amount of time and stuff. So with that, so we're talking about wholetailing. So this is something that we do each and every day. This is basically where we are buying a property. What we do with it, basically we buy a property, we clean it out, we put a lockbox on it, and then we are a brokerage as well. So I'm an agent, Randy's an agent, Brett's the managing broker. So we list our properties on the MLS, and I know we see a lot of other even wholesalers doing this as well, starting to just wholesale their properties, take them down themselves, list them, or even getting listing agreements on properties to be able to sell and things like that, just because the market is hot. The inventory is low in Indianapolis right now. It's not as low as I think it was, a month or 2 ago, but it's still low. So people need inventory. People need properties. So especially if you have something that's in good shape that people can live in or do a little bit of work to live in, man, it is selling on the market, selling super quick. So Randy, you're dealing with this each and every day. You're dealing with all of our listings and things, and it's kind of remarkable how quickly things are kind of going off the shelf and stuff with on the market of just, and also just like kind of what our buyers are actually buying stuff for, and then what are like through agents, what they're buying off the MLS and stuff like that. So what are some insights you have on this topic, man?
Yeah, like right now, if we get just speaking on how we operate, if we get something that's more towards the line of retail grade, meaning we still get it at a pretty deep discount, but the end buyer we kind of know is going to be that owner occupant. That's when it's really good to just throw it on the MLS, because right now just things are flying off the shelf, and if it doesn't need too much work, and you've got, I don't know, a $10,000 to $20,000 spread that you can make in there just by throwing it on the MLS and selling it in a day. That strategy is really working right now. wholesaling does, if someone does take this on as one of their core strategies, though, it does take a lot of like hands-on, working with, coming through leads, doing some marketing, finding these properties that are going to work. So, it, in my opinion, out of all the, strategies that we'll talk about today, wholesaling, I think, involves more work on the front end to get going, and getting quality leads and coming through those and getting started. So keep that in mind when doing this strategy. But right now, it's definitely a good market for something like this.
Then obviously with the strategy too, you have to have the funding behind you to be able to do it, to be
Yep.
able to take down the properties and things like that. So that's something to consider. But if you're in that position, or you see a certain lead come across your plate, they're like, oh man, this looks good. Like this is, I feel like this could be, put on the market. It could be an option for you. So something to
Mhm.
consider. So like I said, this is our main strategy. This is what we do each and every day. It works for us. We do assign contracts. We do, do some traditional wholesaling as well. We do some owner financing and things like that. But this is the big part of our business. Is wholesaling, and right now it's working tremendously. And I know a lot of our other peers here in Indianapolis, this is what they're doing right now as well, because listing properties on the market, they are selling for a great price and things, and it just brings more buyers into your pool of what you're able to do. So
Mhm.
something to consider there. All right, next strategy, Randy, just fix and flip. So it's been around for a while. People want to do it. It's HGTV, and it's super hot on there, and everybody wants to do
Yep.
it. Everybody in their husband and wife teams and family teams, and just people people doing it on their own. But it's a great strategy. It's worked for multiple years. One of the episodes that we do every other Monday, Dave Short, one of the best fix and flip guys here in Indianapolis, he joins me every other Monday on the Indy pod, and he's been doing it for a while, has a lot of experience behind it. But so we see a lot of people right now, I feel like, are even that were traditional buy and hold people, are like, hey, I'm just going to start doing some fix and flips. They can be
Mhm.
big properties, or big projects, small projects, a little bit of everything. And you can be successful with any of those strategies here
Yep.
in Indianapolis. I think you can definitely basically get in a low price point. There's times that you can pick up a property for maybe like $50,000-$60,000, even just put 10 to 20 into it, and be able to sell at that $90,000 mark, $100,000, 110 mark. Those kind of quick flips, I think, are definitely
Mhm.
possible. And then of course there are still the big projects too, the ones that the big houses that you'll see down in Windsor Park, or Fountain Square, Bates Henry, some of those big projects and stuff. So whatever kind of what level you want to do, however much work you want to put into it, the fix and flip strategy is something that is being successful right now. We just got finished talking about how hot the market is, and how people are looking for properties on the market. Well, if you're fixing something up to where it's going to be something nice for people to live in, you're going to be able to sell it on the market here in Indianapolis, because people need homes to live in. So
Yep.
the new builds are, they're going crazy right now, because there are, such less inventory of people that are basically having those properties that are available for seller by owner, because, just because of the situation we're in with the COVID, and, the forbearance and things like that, inventory is a little bit low. So the new builds are killing it right now. So if you have
Yeah.
fix and flip property they're putting on the market, you can take advantage of that right now.
Yeah, yeah, the good old fix and flip strategy, man. This is always going to be, I think, the most popular out of the group. Everyone starts out, they want to do this. So, um, one thing with this strategy, though, obviously, the market has to support being in a flip, either area or neighborhood, because right now, it is definitely in that type of market where things are. If it's renovated, great, it's flying off the shelf. Pulled some numbers last night. Out of all of Indianapolis, according to MyBor, average days on market's 30 days. I mean, that's perfect. And average price is 186. So you're getting a lot of low barrier to entry, and it's really anyone can flip a house in that 186 range if you're brand new or if you're seasoned. It's kind of like that perfect price point. And yeah, it's the market right now to definitely take advantage of something like this, and multiple areas of Indianapolis where you could do this. People do this a lot in the suburbs, even outside of Indy. We're talking like the Greenwoods, the green fields, all the green areas. It kind of just works everywhere right now, and just again, it just kind of depends on the market and the neighborhood you're in. But right now, it's definitely a hot one.
Yeah. So I think it's, and just with that, I think it's something to just consider too, whether when you're sourcing your deals, you're figuring out like, hey, who I'm going to buy this deal from to fix and flip and stuff like that. Just, make sure you're getting your eyes on it. Make sure that you're having, whether you're the contractor on it or you're having your contractor walk through any of that stuff, just make sure you're doing all your due diligence on that front end, to basically, number one, make sure the property is what you think it is and what, your scope of work and everything like that too. But then also that the comps around to support what you're doing. So, Randy brought that good tip there. Just make sure if you are doing a fix and flip, make sure the numbers on the back end are going to support what you're going to be able to sell that for, and things like that, and leave yourself a little bit of cushion there. But fix and flip, just a great strategy here in Indianapolis. I feel like it always has been, always will be. Indianapolis is a great market for that, just because you have such a low entry point, to be able to do it. And also, it's an affordable city for people to buy homes. So that's what you have a lot of families that are living here and moving here and things like that. So it's an affordable city to buy homes. So you always have that people looking for those nice homes that people fixed up and they have the nice trends in it and stuff like that. That's what they want to live in. So, all right. Good stuff. So next strategy I want to talk about, kind of a little bit off of this, is just let's talk about like just seller financing, note buying, selling, things like this. I think there's a lot, and we can kind of take this in a couple of different strategies or a couple of different ways. So one of my favorite things is, since we just talked about fix and flip, let's talk about this, because I think there's real opportunity here in Indianapolis. I see some people being very successful with this, but I don't think there's enough people being as successful with this as they can be. And that's basically kind of doing the fix and flip, but instead of selling it, on the market or anything like that, sell it on owner financing, sell it on terms. So you have, there's a lot of people here in Indianapolis that maybe can't get a traditional mortgage, even like just the amount of entrepreneurs that there are here in Indianapolis that can't necessarily, they don't have the 2 years showing of their pay or anything like that. That can get a traditional mortgage. So being able to sell on terms, I think is very possible. And it's a great strategy here in Indianapolis. So if you're kind of one of those things too, if you're, fixing up properties and you want to do that fix and flip model, but if you are okay in your cash position and no matter where you are, if you think, hey, instead of, I already have rentals and those are going great too, but maybe I want some other mailbox money. I want to be able to have some other passive money come into me. I think being able to sell on terms is a great strategy. And things like that. So you can get there's people in Indianapolis that can put down good down payments. You can get a great interest. You can basically sell properties with a great interest rate. We won't get into all the people have to go through underwriting, people have to go through stuff like that. So I don't want to throw out numbers of kind of what's going on, but kind of a typical deal that we do is pretty realistic. Just kind of a cut and dry thing is that we could basically, let's say we have $100,000 property that we're selling. It's, in the past, we've been able to get a $30,000 down payment on that property, so that property for 10% interest to a qualified buyer. With that, payments of around maybe like $750 a month, something like that, for 15, 20 years, however that's set up and however those numbers work. I think it's very realistic and very possible for multiple people to do that here in Indianapolis, especially if you're kind of already into it. Like, hey, I can buy a property super cheap. I can fix it up and get it to where I need it to be able to sell it. Maybe you need that cash right away. So you sell on the market, and that's fine. But another strategy is that you could sell that thing on terms and really be able to have that note that you would basically be able to collect on for the next however many years and stuff. And then there also is that strategy of you can turn around and sell that note as well. So that's a great thing that you'd be able to do. But then Randy, also, you can just basically, if you just want to be the bank in general, you can buy and sell notes all day here in Indianapolis for the most part.
Yeah, absolutely. I think when buying a property with the intention of seller financing it to someone, like you kind of touched on it, like you want to set those terms that you're going to do for each deal as far as your down payment interest rate. But, I have here in my notes that you could really do this anywhere. You could sell or finance a property anywhere in the city. It's not really a good market for that, but kind of speaking on that, in my opinion, because I like to get large down payments. So if I'm going to sell a house in Fishers on seller financing, it's going to be tough for me to find someone to give me 30% down cash on a $250,000 house. It's tough because not a lot of people just have that cash laying around. But if I go, inside the loop, we've had a lot of success doing this kind of like on the west side, where we've got a home worth $50,000. A lot of people have 30% laying around for that saved up because they've been wanting to buy a house for so long, but they can't get a traditional mortgage. Put down 30% in cash, and then we'll just structure the terms how we usually do it, but just kind of wanted to point that out. It just kind of have to set your standard of, hey, what's a good down payment for me, um, to make this deal make sense. So the lower price of the property you have, the higher chance of getting that seller financed, in my opinion. But you can certainly go seller finance a $200,000 house if you're cool with getting 5% down, if that's your cup of tea.
Yeah.
And plus, if you on the back, if you plan on selling that note, if that's going to be your exit strategy out of that, set that seller financing up, getting those attractive interest rates is important, because that's what note buyers are looking for. They're not really concerned about the property. All the experienced note buyers I've seen, they're just looking at a spreadsheet and they're looking at the numbers. What's the interest rate? How much is the monthly payments? Putting a servicing company in place to handle everything for you goes a long way. It's completely hands off, and it attracts a lot of people. From what I've talked to, they usually kind of in the past did a lot of stock market investing, and that's always going like that, as we all know, especially right now. And I've seen note investing kind of take off, but until now, as I've kind of paid attention to it. So it's been around for a long time, but I've noticed it kind of taken off on our end, and people around Indy as well.
Yeah. And then you can also go, just to kind of take this in another area within this realm as well. It's always possible to be able to buy on terms and then do the wrap and sell on terms as well. So that's a high level. That might be a whole other episode. We can get Justin Bogart on, or Eddie Speed or somebody like that, to kind of explain all that stuff. But this it's something that definitely is a strategy that is able to do as well. If you're somebody that's sourcing your own deals and you're talking to people, well, maybe that you're regularly buying something for cash. Are you able to buy on terms? Are you maybe it's a subject to, maybe it's a something like that, but you basically being able to have the owner seller finance it to you, and then you can do the wrap and then be able to sell that on the back end as well is also a possibility. I don't want to get into all the logistics of that on this, but definitely a strategy that people are doing here in Indianapolis and being successful. So, all right. Next, just kind of on our list here, is we've already talked a little bit about, wholesale and the fix and flip, and then just the seller financing, the notes piece of it. The next one, let's go into the BRRRR strategy. There's a lot of people in Indianapolis doing the BRRRR strategy right now, with just the appreciation that some of these areas have. So we're talking about the BRRRR strategy. We're talking about being able to buy a property, remodel it, rent it, refinance it, and then repeat it. So that's what we're looking at here. So Randy, I'm going to with this one, I know we got a lot of buyers that are looking at this one right now and their strategy. So the ones that are being successful with this right now, what are some of the things that they're really doing that's kind of putting them over the edge, that is making this successful for them? Because I know a lot of people kind of had a little trouble with this as we got into COVID and this, they weren't getting the rents in, and they were over leveraged and things like that. So that's tough. But the ones that are doing this successfully, what are some things that stand out in there with what they're doing, man?
Yeah. This has definitely been a strategy that has taken charge here in Indy since last year, probably mid last year. It kind of blew up on Bigger Pockets, and everyone in Bigger Pockets said, "Hey, I want to do this in every market that I can." But it's been great. So a lot of the buyers I work with that have had success, they're pretty flexible on, I guess, their criteria as to, hey, when I get this occupied and get the renter in there, how much cash do I need to pull out? Because I know everyone wants to pull out 100%. That's like the perfect BRRRR. It does not happen every time. And you can talk to people who've BRRRR'd, 50, 20, 50 properties, whatever it is. They will tell you that they haven't completely taken out all their money on every deal. So I guess what I'm saying is, what separates the people being pretty successful with it is that they're okay with leaving a few $1,000s, if it's 5,000, 10,000 in a deal after the refinance, if they could take most of it out and then move on to the next deal. Because at the end of the day, they're still building that portfolio. I think the point of this strategy is to be able to, like, the big goal is to build the portfolio, and use as little money as possible. After you take your money out, just use that same money and do it again. But if you have to leave money in there but still get another property under your belt that's cash flowing, that's the whole goal. And I think if you keep that in mind and not be so stuck on, I need to get 100% every single penny out, that's how I see a lot of people kind of scaling quicker than others. It's okay to be I guess it's okay to stand your ground and say, hey, I want to get 100%. That's fine, but it's going to take you, from what I've seen, it's going to take those buyers or those investors a little longer to scale and kind of get to the number of units that they want. Um, it's a great strategy, man. Like I said, I first heard it on Bigger Pockets a year ago, and like I said, it's taken off, and it's kind of the sexy strategy right now. It's like, hey, I'm a Burr investor, man. You know what I
Yeah.
mean?
So, and it's been around for forever. This is what, multiple people have done this for multiple years, and things like that. So it's one of those things of, you see a lot of people like Randy kind of mentioned on Bigger Pockets that are putting out there that are starting to do this and, kind of new to it and things like that. Definitely take their advice and what are the things that are working for them as well. But also reach out to those people that you're networking with that are in your market that have been doing this, since back in the 90s, back in the 80s and stuff like that, that they were really kind of that's how they're kind of putting their portfolios together, and being able to refinance. And a lot of times when I'm talking to people like that, they had a seasoning period in there. They were waiting to basically be able to refinance, let that appreciation happen. And,
Yeah.
basically they weren't trying to do it as quickly as a lot of people are now. So the people that have been doing it around for a while, I think that's where they were really successful with it, is because they could wait a little bit, and then be able to pull that money out and things. So I think it really helped them. So something to consider there.
Yeah.
So like Randy said, it seems like a new strategy, a sexy strategy, thing like that. But people have been doing it for a while, and people have been successful at it for a while.
Mm-hmm.
With all these strategies, I think it's always something important to take away what's working with the people that are just trying this out. Because even something that we do with the wholetailing, there's something that, some young gun will be out there and basically be like, hey, oh man, we never considered that, or we never thought about that. It's important to get the new information of like kind of what's that new technology that can help you out with this, the new strategy can kind of help you out with this, but also leaning on, hey, what are people that are doing that have been doing this for a while? How
Yeah.
how were they successful at it? How did they build a 50 property portfolio by doing this back in the 90s? That's
Yeah.
important. Or back when there was a crash in 2008, when a ton of, people were snatching up properties and they would refinance it later and stuff. So
Yeah.
definitely things to consider there.
And then also, I think another thing that I think it's important to point out with this particular strategy is that there's a lot of parts that go into it. So I know the other strategies we talked about is kind of the investor and the property, but this involves also getting a good property manager to work with, and also a bank. You got to get a lender, and you got to get a lender where you can get good rates, and I can meet those LTVs that you want to hit. So it's not just looking at the property, working with a contractor, and then placing a tenant. You gotta have a whole team in place to make this strategy really work well and continue. So just want to point that out.
Yeah, definitely. And then last strategy we want to talk about today is just this simple long-term buy and hold. So basically just buying a property and holding it. So
The good old tried and
Indianapolis,
true method.
man, it's tried and true. It's been, Indianapolis is a great city for this, just because of the value they're able to get for the rent and the amount of renters that are in Indianapolis. So Indianapolis is one of the most affordable cities in the United States to buy a house as far as big cities go. But yet there's still so many people here that are renting. And for that, that's one reason that, even the seller financing model works as well, that we already talked about, because people, maybe they want to be a homeowner instead of a renter, but they don't think they can because they can get a mortgage. That's one reason that works. But buy and hold works so well too, because there are so many people that are renting here in Indianapolis. And you can get great value for that rent that basically exceeds that 1% rule in a lot of cases, unless you're, way out in the, in the Carmels and the Fishers and stuff like that. You might be a little bit low. You're gonna have a longer tenant, which is a positive there. But it's something that can be done all over the city, no matter what area you're in, no matter what pocket you're in, no matter what class of neighborhood you're in. You can find tenants, you can find renters that want to live in those properties, and something that's great. Like Randy said, tried and true. It's been around forever, and it's working in Indy. It's going to continue to work in Indy. So, Randy, what do you have to say just about buy and hold, and you see our investors being successful, what they're doing with that?
Yeah, it's just the classic way of investing in Indianapolis, man. I've talked to people who have been doing this for 40 years. They bought their first rental in Indy 40 years ago, and they're still doing it, and their portfolio has grown so large. But this is just for the people who want to hold those properties for the long run, man, and just increase their monthly cash flow to get that financial freedom, right? So all those rents take over that net operating income every month takes over your living expenses, and you don't have to work. That's everyone I talk to doing this for the long run. That's kind of where they put themselves in now, after starting this, 10, 20 years ago. But yeah, it's this is another one where having a good property manager comes into play. You want to make sure that they're constantly placing good tenants in there, because you can't have a good long-term buy and hold if you've got high turnover or if it's sitting vacant. So you got to have a good team screening your tenants and placing them. And then also, if you've got someone in there that can help you keep up with the maintenance, because you're going to get to a point, if this is one of your strategies, you're going to get to a point where you can't personally, go out and fix every water heater that breaks, or anything like that. So you want to make sure you have someone that can actually go out there and do that for you, and kind of turn this into kind of a passive, hey, I've got my team handling this. They're just sending me the checks every month. I don't personally have to worry about anything. I think that's what the long-term goal is here. But I love it. This is Indy's little bread and butter strategy, I think, and it'll be here forever.
Yeah, 100%. So those are the strategies that we kind of went through. So we had the long-term buy and hold, the wholesaling, seller financing notes, the burst strategy, and then the good old fix and flip. So those are strategies that we see people being successful in Indy right now. There are some other things that some people are doing that that are working as well, and that's good, and that's strong. Continuing throughout Indianapolis is a great place to invest. A lot of investors that are coming here to Indy, a lot of investors that have been in Indy here for a while, that are continuing to succeed. So this is a list that we came up with. Let us know if you have any comments. Do you have any questions? Do you have anything that you want us to kind of review or go over anymore? We'd love to hear your feedback. Love to hear what you think about kind of the list that we came up with. But this is what we see being successful now, and we see whether it's us specifically doing it and being successful with it, or the people that we are sourcing our properties to, the people that are buying the properties from us. This is what they're doing that they're being super successful with. It's a great time in Indy to be investing, and all these strategies are going to work for you. So, Randy, with that, before we get out of here, do you have anything last tidbits or just words of wisdom, man?
Just keep being awesome and keep investing in Indy.
So awesome. Great stuff. With that, that's a wrap for this episode of the Indy Investor Pod, and we will see you next time. Take care.